Hey, what's up? How y'all doing? Sorry it's a little bit late. I'm getting a late start on my work. We call this the second shift at the Bulls on Wall Street, right? We got our trading hours, then you teach class. That's your second shift. And then after that comes in, I can do my regular work. But let's take a look at the market, then we'll get into the watch list for today, and we'll get this thing moving. Had a pretty good day in the chat room. A lot of good calls being made, especially in Acacia and some of these other ones. Saeed was on fire. The market's looking very strong. I know everybody thinks it's just kind of grinding along and it looks like it's going to roll over. But one of the things to understand is when the market's flat and you're still seeing big breakouts in stocks, that's the sign of a healthy market. You know, what I want to see and what I love to see is when the market's flat and my whole watch list is just going green, right? And, you know, I use this like this Medved trader to manage my watch list and look at all the green, right? When you just see all that green just flashing around, but the market hasn't even moved, that's a sign that number one, you picked the right stocks, but number two, you're in a healthy speculative market. Because one of the things that happens in big bull markets is that your flat days in the market will actually be the best days to trade because you won't have to chase anything with a market gap or all the stocks spiking at the open and then sitting around all day. You get to stick and move, and the market's not going to get in your way, right? And that's what we want to see because that makes it a stock picker's market. As long as you're in the right ones, you're going to have a good chance. And so you can see we don't have really any new update on the market. It looks like we're making an attack at highs. We're still consolidating this big breakout, this multi-year breakout. And we've been consolidating really since what it looks like now, July. So we're getting September, a couple months here. Once again, that's not abnormal. It may seem like it's frustrating. And part of that was just the summer grind of it being, you know, the end of August, the dog days of summer. And then the other part is obviously this consolidation. It's like we gave up this one big consolidation to essentially thrust for a few days and go into another consolidation. But as of this moment, we're not seeing any signs of deterioration that would say this market's going to break down or we need to get really defensive. If anything, what we're starting to see is some movement, especially today, that would suggest that we want to even be increasing risk. You know, we started seeing some names and breakouts in some of the old high beta stocks that have been dormant. You can see this thing has been dormant, right, since July. We got a breakout to all-time highs. A nice thrust, too, 16 bucks. You know, we want to see that. Netflix coming out of zone. It had its first nice day in quite some time, and it's right at that 200-day moving average. If you can get over this, you know, you can see here you're kind of coming out of range. We want to see this type of move in these type of names. Facebook, right? A big move today. Look at that candle, right? You don't see those kind of moves from Facebook very often to all-time highs right here. So what we're seeing today was some money flow back into the high beta stocks, some of the big name stocks that we were trading so successfully last year that have been dormant of recent. The flow has come back into them. So now we want to be putting some of those FANG stocks back on the watch list. Facebook, Amazon, Netflix, Google, back on the watch list. These things are hitting all-time highs, and the range and the volume is starting to expand today. We want to see that. So far, so good in the market. Now let's take a look at some of the other indices here. You can see Russell 2000, no signs of weakness. We just got a 20 SMA rider over here. NASDAQ coming right out of its flag right now. So, you know, you can see here what you're looking at here is a flag breakout, right? We've consolidated that multi-year breakout, and now we're pushing to new highs, and so that suggests higher prices. But if anything, it does not suggest anything that would suggest a deterioration in the tape. And one of the things I always kind of keep an eye on, like I like to do when I'm doing my analysis is, you know, I'll move my charts to like 30-minute charts or 60-minute charts and see if the patterns that are happening on the little bit smaller term time frames are starting to show weakness that would happen before you see it on your daily charts. And so, you know, always be mindful of that you will see weakness on other time frames before they show up on the daily, and that will give you a clue on when to start getting really defensive. So Acacia, this is a hot stock. Paul, who runs our swing service, he alerted this at 109 or 110 a few days ago for our swing trade service. This thing tapped into 127, 128 today. You can see, but pretty cool, right? I mean, it was a pretty cool move. So now you're day one out of this flag. You saw that nice pattern here. Saeed called this as a day trade at 115 in the chat room today. And went on this monstrous rip. A sweet play, but it's going to probably have more upside to it. The stock like this could run for 2-3 more days. So tomorrow we'll be looking for early morning flush. You get some weakness, maybe even a slight gap down, a roundabout, a rounding, and then a red to green move. I definitely would put that on your list, though. I've been watching this ADSK. This is probably more of a swing setup, something I put in the, my IRA or something like that. But this is what we'd call an earnings gap, a power earnings gap over here to highs. And now you're starting to consolidate this move. You can see here, and as you're starting to build support, it's getting ready for your next push. And one of the things to be mindful of, especially in this market where you're so strong, you tend to get gap ups in the market and stuff like that. There's some good money to be made in swing trades and stuff. This is the time where you really put the juice on in your IRAs and stuff like that, because you just wake up and you have gaps in the market. This BRZ, I was actually about to take this thing today for a trade, and I missed my entry here from a couple days ago. So I've been watching this one. I think this one has a good look. Emerging markets themselves look pretty strong. You can see EEM. This is your emerging markets. You're on day 3 of a run, and you're starting to really, really get some juice out of this. So that could, that could really give us a push in some of these stocks. You can see with China too, right? After that big breakout over the 200-day moving average, you're starting to flag right above your MAs, and you're starting to see some pullbacks in some of the Chinese stocks. And so we may get a rotation from some of the names like Sina that are really extended, and into some of the other ones that haven't moved this much, and maybe we'll see a little bit of that rotation. So keep a handful of those on watch. This CCLD, we did a good job on this one today. We made, I don't even know, $3,500 on this thing today. It was a pretty good trade off a very, very simple setup. I did another video on it, but you can see here, this stock had a nice flag breakout. This thing's not connecting, but a nice flag breakout where we got into this thing at 1850. It was pretty tight, and we ended up selling our last shares right at 2360s or so. And so we had a nice ride. My last 200 shares of this stock that I had from 1850, I ended up making like $1,200 on it on my last 200 shares. So it was a pretty cool day. You don't get too many plays like that, but it has that formula. You can see here, right? The stock had an IPO breakout to highs, and then you got that nice flag. CNX, one thing is that even with oil acting so topsy-turvy, one day it's up, one day it's down, oil stocks themselves are setting up. So, you're seeing like some nasty action in USA where it drops down and it's just stuck in this big ugly range. But you're seeing a lot of the oil stocks starting to act well and come out of range. And so that's an interesting divergence that would suggest that any little pop in oil is going to send some of these stocks really on a multi-day run. This is another one I'm looking at possibly in my swing trade account with the stop under 90. You can see the curl is happening now as this thing is starting to come out of range. But I think this one's got some good legs in it. A stock like this probably will make a run into the hundreds, for the $100 roll. EOG, another one, after that big gap here, we consolidated and now we finally pushed through. And so you start seeing that move in oil. This will be an easy day trader for you. This Etsy has finally broken out of this kind of low volume pullback that it's been on for quite some time. It's attacking its highs, which is 1450. That would be your triple tapper flag breakout. The problem is now that you're on day 3, it's going to be a little bit too extended to run into the 3 tapper for the breakout. So ideally, I want a day or 2 pullback, make a higher low here. So right, you want to back and fill it just right there, and that will send it off. Right, you want to push, pull back, and then push. That's the best breakouts when you get that type of move. HCP, another one. This is probably a better swing setup than a day trade setup. These type of stocks, REITs suck for day trading. They don't have the range, but they make for easy-go-lucky swing trades. And with the market coming out of its own flag, this is probably a good time to have a few swings on the books. This will be a nice kind of easy trender over here. You can see that it probably won't give you too much headache, and the risk is $1.50 or so for the potential move. LC, this one's consolidating. It needs to come out of this flag, and you can see if it does, it's got the room. Your first push would be into the 6 spot, but I mean, you really talk about filling this gap into 650s if it can go. Leads had a push late day. Dun, 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 dun. Hold on. Regardless, we'll go and look at it from here. Leads had a nice push here, so you can see right here you got that consolidation. You've come out of range here, and you've got like a little bit of a flag pattern that's been developing. The problem with this stock, I think, is that it trades a little bit thin. It's a dangerous stock for new traders, I think, because you see the past moves it's done, and it kind of gives you that, you just think you start getting ahead of yourself, right? You have big city dreams for your small account, and then you get stuck in it, and it's hard to get out of, and it's stressful because of the spread, and the next thing you know, you're just in a world of hurt. So that may be one stock that, you have to think about and say, I may not want to, if I'm not trading really well, then I want to stay away from that stock. When I'm trading well, then I can take it because it has the possibility to make a big move. But I know for some of you guys, this type of stock, I notice with our traders in our hedge fund, this type of stock is the recipe for disaster for some of them because they end up chasing it, and then you got to sell it, and it's not easy to sell. And so be mindful of that. Take it at your own risk. Something like Netflix is just much easier to trade. Now that it's hit its 200-day moving average, if it has a weak open and then goes red to green or thrust through, I'm in this thing. I think that we want to really be watching this for push because while this market's been flying and all the stocks like Amazon and Facebook are back at highs, we've been in a big, ugly range on this stock. It's not even a really pretty chart. But if it can crack over its 200 SMA, which it's failed at a couple times, I think now you've got the potential for a move. This NVRO looks like it's got it's got the $100 roll on it also. Sino, this is for a rubber band short, right? So you had 92 stochastics. You cannot day trade this long. If this thing gaps up, I think that's going to be the exhaustion gap. So watch for a gap up. If it gaps up, that's going to be the exhaustion gap. We're going to want to short that gap. This TRGP's got a super hot daily chart. This is what we call flat top breakout. Test, 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 test. You got fairly low risk here. You can probably take it for a swing too. It's also going to be good for day trades. You may want to watch for a weak open on this one in a red to green. If not, I mean, it looks like you got a multi-day runner if you want to hold it for a few days. And then I really like this WLL because this is a bottoming pattern. This is what we call 1, 2, 3 pattern, where you get a 1, a 2, and a 3, a higher low. And now that you're starting to break over your moving averages, I think you're going to start trending back on this thing again. I think you can. It's got its secondary out of the way, and it's absorbed all that, and now I think we may get its next run in this thing because even OAS looks like it's flagging. And then Yelp, it finally, day one, peaked out of its earnings flag. I think this one can start accelerating also. So that's it for now, guys. For those of you guys that don't watch me trade, we're going to have an open chat next week, so you guys can come in. Otherwise, I'll see everybody in the chat room tomorrow. Let's go and make some money and do something fun. Take care.